The two most popular business structures in the UK and the rest of the world to run your business is either as a sole trader or as a limited company. In the US, a limited company is typically referred to as a C corporation. In this video, I'm going to outline the 6 steps that you need to go through in order to transfer from a sole trader business into a limited company. I'm also going to share with you the framework, the psychology, how you should approach running your new limited company. Hi folks, welcome to another weekly episode on I Hate Numbers, the channel that's there fundamentally to help improve your financial awareness, improve your money mindset and attitude, help you make more money in your business, save tax and save time. What a fantastic combination that is. Now this video is not about the rationale, the reasons why we might become a limited company. Typically those are to either save tax, to either give yourself some form of legal protection and protecting your assets. What we're going to focus on is the 6 steps that we need to go through. Now before we go to the next 6 steps, what I want to do is to reinforce the idea and the framework and the mentality you should adopt when you start running a limited company. Now fundamentally, in legal terms, a limited company is a new entity, it's a new being separate from you. So if I introduce my friend, my limited company, so I'm running a business as I Hate Numbers, a sole trader, sole proprietor, and I decide that I wish to run my business through the medium of a limited company. So step number 1, I will create a limited company. I will find a name that's not been taken. I will either do a DIY and register that company myself, or I would appoint an accountant or a formation agent to do that on my behalf. Now, once I've created that limited company, my first step, here, what I've got to remember in my mind and in my framework, even though I fundamentally will control that business, what I've got to remember is that I've got to see it as a separate being. So look at it as your employer. So if you've ever worked for a company beforehand, the company that you create will be your employer fundamentally. Now, first thing, by the way, folks, when you create your limited company for the first time, you've got typically 2 main choices. If you are a not-for-profit entity, you will either choose a CIC route or you'll choose a limited by guarantee company. If you are a commercial company and you're looking to benefit from all the rewards that you make in your business yourself, then you will form a limited by shares company. So that's step number 1, and make sure you've got that framework in the back of your mind and that influences everything that you do. Having done that, the second step in the UK that you've got to do is you need to inform the authorities. And by the authorities, I'm talking our friends HMRC, the Tax Office, Her Majesty's Revenue and Customs, if you want the full title. Now there is a form that you can complete. It's a matter of a few moments, or you can get your agents, so clients will approach us to fill that form on their behalf. Relatively straightforward. You log online. If you check my show notes, I'll give you a link to what that form is. Typically, you'll tell HMRC that you stopped self-employment, the date you stopped, your national insurance, your address, and other such details. Submit that form. Also, when you complete your personal tax return, you will also inform them via your self-employed pages the date you stopped being self-employed. So that's the first 2 steps out of the way. So we've created our company, we've informed the authorities through a form that's online, and we also inform them through our personal tax return. Now eventually, as things chug through the system, Companies House, which is the regulator, which is the repository and the administrator of all limited companies in the United Kingdom, will contact HMRC, and eventually some numbers and some letters will arrive in your letterbox. Now what that will be things like your corporation tax reference. You then need to go through, again, your agents can do that on your behalf, or you can do it yourself. You need to make sure you inform the authorities accordingly. Now step number 3. In legal terms, you do not have to have a separate bank account for a limited company. I certainly recommend for all our limited company clients that reinforce that idea of distinction between you and the new limited company. It's not you in accounting or tax terms, and I would create a new bank account. It does 2 things. Number 1, it ring-fences your personal items from your business expenditure, and it also reinforces the fact that this company, this thing you've created, is separate from you as the individual. So I would personally recommend a limited company bank account. Again, you can do it online, or you can go for the traditional high street banks. You can also do it at the moment you apply for a limited company, so make your choice and decide what's best for you. Now, having done that, remember, a limited company gives you as an individual protection So if things do go wrong in your business and there are debts that accumulate, your personal assets are protected as long as you're not given a personal guarantee. Now, what you've got to do, due diligence suggests, and good practice, you need to inform all the people that you engage with that you are now a limited company. So typically, you will have to obviously tell your employees. You have to create a new payroll scheme to set that up. You need to contact your suppliers. You need to tell your bank, obviously. And the bank, by the way, will not open up the account until you've given them the company documentation, the reference number, and the proof that you are trading. Make sure you contact all the people that you engage with, your freelancers, because the invoices that you will be receiving have to be invoiced or should be invoiced to your new limited company. So you've got a good communication exercise to carry out. It may be, by the way, folks, that some of your suppliers may wish to open up a new credit account with yourself. You may need to go through some credit checking, and you may find it challenging in the early stages to get credit facilities because the status is changed. Remember, your suppliers will have less protection if things go wrong, so therefore they will be going through some more risk assessment. So we've dealt with 4 key steps. We've dealt with creating the company. We talked about informing the authorities that you are no longer a sole trader. We also have to tell them by the medium of the tax return. We've informed all the stakeholders that we work with, the freelancers, our employees, our suppliers, and the bank, that we are no longer self-employed. We've also registered our company for the corporation tax and PAYE. You will now be a director, brackets, employee in your company, and it's really essential that you register for PAYE. Running a PAYE scheme affords you much more beneficial tax breaks, which again, link in the show notes to previous videos, and we've got more of that to come in the future. Now, having done all that, what's the last steps? Now, you may have assets that are built up in your business as a sole trader. Obviously, they're going to be used by the limited company. So make a list, transfer those assets accordingly. Now, what will happen is you can, in reality, see that as selling your assets and your business into your new limited company. Now, depending on the size of your sole trader business, depending on what's going on, that may trigger a potential tax liability on the incorporation of your sole trader business into a limited company. Now, it can depend on a number of factors, such as the size of your business, whether it's just you running that business, whether you've got a team, and there is a tax exposure potentially, and that will be called capital gain. It doesn't automatically happen. And again, watch out for a future video where we're going to talk about that aspect. Again, make sure you seek advice, make sure you do that correctly. There are ways to mitigate that tax. Now, what will happen is when you transfer the assets into your new business, on paper, your new limited company may not have the funds to owe you, so you create something called a director's loan account. What that means in reality is anything you transfer into that business, your company, remember, which is not you as the individual, now effectively owes you that sum of money. Now, just to wrap up, folks, what I would certainly say is conceptually, it can seem quite scary. There's going to be more regulations, more documentation involved in a limited company compared to a sole trader. It does offer obviously huge tax advantages potentially and planning opportunities. And the key thing is for you to remember the visual distinction between this thing you've created and yourself as a sole trader. Hope you found this video useful. Remember to hit that subscribe button. I've heard it called smash the subscribe button. Subscribe and hear weekly updates on all matters that affect you and your business. If you found it useful, I'd love some feedback and some comments. Until next week, folks, have a great week.